Welcome back. Let's talk about the other listing on our bourses today. We have Rashi Peripherals, which has opened with a premium. And we have the management joining us from the company. We have Kapil Suresh Pansari, who's the managing director, and Himanshu Shah, who's the CFO, joining in as well. Thanks a lot, Kapil and Himanshu, for joining in. Congratulations once again on the listing. Kapil, let's start with the business prospects going forward. From what we understand of your business so far from your red herring prospectus, the way to grow for you would be more brands, more products from the same brands, more clients, more outlets that you offer in your products in. And the third one is faster inventory turnover. For all these three parameters, what is the growth output that you can guide for going forward?
So the demand for technology product continues to remain robust, and we see a good uptake in both commercial and retail market. Our product portfolio has been consciously chosen for our customer needs and which is favorable for their business as well. We will continue to drive in this manner, and we hope that we'll continue to grow in the future.
Okay, all right. Hi, gentlemen. Good morning, and thanks so much for speaking to us. Well, I think, the street is quite excited about the prospects of the business. So there's going to be big responsibility on you all to deliver. Let's talk about a couple of aspects. One is, what is the improvement in margins that you all can focus on from here on? Give us a rough band out there, point number one. And your cash flows were negative. When do they turn positive? Could we see it by the end of this fiscal?
So the way our business runs is that this IT distribution business is a very structured and a mature industry. The margin ranges between the average industry standards and will continue to remain in the long run, and therefore this is more of a business of an ROE, ROCE prospects. Looking at the business growth momentum, the industry continues to grow at about lower double digits, and with this growth of the industry, we will have a better opportunity with this IPO that we've raised the money to continue to expand our portfolio.
Kapil, give me a couple of details. You're saying the industry will grow in low double digits. So you will outpace the industry growth. Is that what you're trying to tell us? Yeah. Margins will hold at where they are, going by what you're saying.
Correct.
So, and could you tell us about the cash flows turning positive?
So the way this last 20 years, Rashi Peripherals has clocked a CAGR of 23%. The reason for raising this IPO is also because we use debt equity ratio to grow our business. So currently with the IPO money will pay off the debt, and we continue this trajectory will help us to turn cash positive in the future.
You will turn cash positive in the near future. Is that a possibility?
That's the objective.
All right. Now, since this is a ROE business that you're talking about, if I break down your components of the ROE, net profit margin would be one. The second one would be leverage, and the third would be asset turnover itself. What are those numbers at right now for you, and what are they likely to be going forward? Himanshu, you can answer.
Yeah, so the thing is the asset, when you asked about asset turnover ratio, the more relevant for us is the inventory turnover.
Inventory turnover
working
ratio,
capital
yes.
turnover ratio, because this is working capital intensive industry. So inventory turnover, like we are able to turn from 6 to 7 times at present. With the increase of growth capital, which we have raised just now, we hope to maintain the same.
So you maintain your inventory turnover ratio at 6 to 7%. Your net profit margins would stay at what levels, and what levels will your leverage be at?
Net profit margins in long term, we have been delivering the range, and as Kapilji mentioned, that this is a matured industry with very defined margins and the risks associated to it. So, deviation range is not much when it comes to upside or low side.
Okay, all right, Kapil, as well as Himanshu, wishing you all the best. Today we had quite a few listings, but it appears Rashi Peripherals seems to have caught investors' imagination. That's why your stock is outperforming, up close to around 5%. We're going to hold you to some of these numbers, outgrowing the industry, maintaining margins, as well as turning cash flow positive. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters, but the Trading Hour team is waiting for you all, so they'll take all the action forward.